We've got another great speaker lined up for us. Who do we have here, ladies?
Well, we have Jeff Tompkins with Altos Trading, and I'm pleased to introduce Jeff. He's been trading stocks, options, futures for about 20 years, and over these years, he's developed an arsenal of highly tested trading strategies, and these have remained effective regardless of the market conditions. So you're about to see why he's one of our most requested speakers. Today, Jeff's going to talk about the challenges trading election volatility, the effect post-election uncertainty will have on markets, the best metric for gauging the volatility in the market, and the momentum indicators that predict market direction. So, Jeff, are you mic'd up here?
We should be good now.
All right, we shall see.
Yeah, that was a fun quiz. I want to know who implemented the capital gains tax.
Not my fan either.
I won't be voting for them. So, no. Anyway, so yeah, thanks for having me. Thanks for the nice intro, Pat.
Sure.
First and foremost, happy Veterans Day to everybody out there. Thanks for all the service from the vets, and I think that's really important to recognize today. And we'll go ahead and jump in since we have a fairly limited time and we have a lot of fun stuff to cover. So yeah, we're going to talk about, more importantly, how to profit in uncertain times. Even with the outcome of the election supposedly determined, we're still going to see a lot of volatility in the market, especially with Trump contesting the results. And then, of course, the COVID pandemic. There's just a lot of confluence of these major geopolitical events and things that are really impacting the markets right now. In fact, I checked the VIX just right before the session, and I think it was hovering right around 23. So we're remaining elevated in terms of volatility, and we'll kind of hone in on that and explain how to analyze that and more importantly, how to trade it in our session today. So before I get started on all of those fun things, we're going to be going over just a quick disclaimer here that most of you are probably familiar with. We all know that trading securities and options does involve risk. And prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options. We will be going over some options trades together today, as well as equity trades. Of course, we need a broker to trade securities and options and must meet suitability requirements. We'll also be covering some trade results from my own personal trading. So it's just really important to understand that I don't guarantee anybody will mirror my performance, but what we do share are based on actual live trades, not hypothetical trades. And so just keep that in mind as we share some of those examples. All right, so let's look a little bit at starting out at kind of what is involved with volatility in the markets, especially around presidential election cycles, because of course we're in the midst of one right now. And really what it comes down to when we look at any sort of major event like a presidential election, or even if we drill it down more into like quarterly earnings events or any sort of unknown that can drive price action of the market. The bottom line there is the markets just don't like uncertainty. And there still remains uncertainty in the markets around the election with President Trump contesting some of the electoral votes from certain states. So it'll be interesting to see how that plays out in the legal system here in the coming weeks and months. But again, the bottom line is the markets don't like uncertainty. And that's what is causing the VIX or the CBOE volatility index to remain elevated. So I'm just going to share some interesting stats here from previous elections that I think are important to consider going into 2021. So if we look back at the last election that Trump won in 2016, on the day before when votes were starting to be tallied and results were coming in, and it became increasingly evident that Trump was going to win, the S&P 500 futures actually tanked by more than 5% after hours. So a lot of times you'll see, that's not necessarily what you would expect, but a lot of times you'll see these sort of contrarian or opposite of what you would expect results in the market based on certain outcomes. But then surprisingly, the very next day on November 9th, the S&P ended up closing up over 1%. So that's a really wild swing in the markets, being down 5% on the futures and up over 1% at the close of trading the following trading day, right? So this is the type of thing that can be very difficult to navigate as a trader or investor. And oftentimes what we end up doing is sort of referring to the so-called experts that predict these outcomes. And unfortunately, the vast majority of the time, they're wrong. And in fact, in this particular election in 2016, the experts predicted that if Trump won, there would be an instant recession and severe bear market. But as we all know, that's not what happened. Instead, the S&P index returned an average of 14% annually over the next 3 years. So if you had just put all your money into an index ETF like the SPY, you would have done really well. Of course, then COVID-19 hit. Volatility has subsided in those first 3 years of President Trump being in office. And then we have COVID-19 and some very, very severe market swings with actually the most severe market sell-off in February and March that we've ever seen due to COVID-19. Okay, so this is really relevant, timely, important information that we're going to be going over today on our session to help you navigate these types of uncertainties. But again, the bottom line is volatile markets can be extremely difficult to trade. So this is a little bit embarrassing. I'm not, as you'll see, not an artist, but I did develop these charts myself, and they're very simple, but hopefully they convey what I want you to understand. On the left side, you see this chart that would be very simple to trade, right? We start at one point down on the left bottom corner axis of the chart and go straight up, right? If markets move this way, we would all be wildly wealthy. We'd have no problems trading or investing. We'd simply put on a position and sit back and ride out the profits, right? But this is unfortunately not how the markets work. There are a lot of different variables and factors that drive price action in the markets. And in reality, what we see in financial markets, even if we start at the exact same point, is something more like this, right? So we see a lot of ups and downs in the market. And even though we may start out and end up in the same place, it's the in-between that makes things very, very challenging for us as investors and traders, okay? Because it challenges things like our psychology, our emotions. Oftentimes, even if we're using a really good system, the system can fail in volatile market conditions. So we're going to solve these problems for you today, okay? You're going to walk away from the session today not having to worry about this chart on the right-hand side of your screen, okay? And we're going to get you more in a situation to be poised to be confident and consistent and more like the left side of your screen, the chart on the left side of your screen. So what I'm going to give you guys today to make it easier is my proprietary SLINGSHOT setup that's worked 100% of the time. Now that's a bold claim, and I'll back it up here in our session. But this particular setup, going all the way back to the dawn of the markets, has played out in the way that I'm going to show you 100% of the time. And in my 20-year trading career, there's really nothing I've ever encountered that has that degree of accuracy. So I'm really excited to share this with you guys today. And I'm going to show you how to identify the setup, how to trade the setup, how to profit from the setup, how to get in near the bottom and not near the top. And of course, we won't make any unrealistic claims that you're going to get in right at the bottom and right at the top of a market. But we can get very close, and I'll demonstrate that for you and show you exactly how to do it for yourself. I'll show you how to apply this setup to any market in any time frame. I realize we probably have a very diverse group of traders and investors on the session today, and I want to make this applicable to everybody. I want it to be something that everyone can use. And so regardless of whether you trade intraday or you're a swing trader or a longer-term investor, this can be applied to any time frame. I'm going to show you a little trick I use myself and in my hedge fund to eliminate the majority of your losing trades. In my experience, I've found that this little trick will help eliminate anywhere from 25 to 40% of your losing trades. So imagine whatever system you're currently using, whatever strategy or approach you're using to trade the markets. Imagine if you could take those losing trades that you're experiencing and wipe out a big chunk of them. And I'm going to give you a little trick to do that. And then I'm going to go over some trade examples with you guys, and then stick with me to the end so you can find out how you can copy my success and get my trade signals I use to make a living in the markets. And by the way, I do trade for a living. I am a professional trader. I'm also a professional money manager. I'm not a marketer or anything of that nature. So, I beg for forgiveness on any sort of marketing things that appear in this presentation. I'm not a marketer. What I'm trying to give you here is real actionable strategy. So please stick with me to the end and you'll get some really good stuff out of this. So let's start out by understanding volatility in the markets. All right. So some of you may have heard of the VIX, or what's often referred to as the fear gauge. The VIX or the VIX is the ticker symbol for the CBOE volatility index. And it's a really, really important tool to pay attention to, regardless of which market or time frame you trade in. And if you're not paying attention to the VIX, hopefully by the end of our session, you'll see why you really should be. But basically what it does is it measures the stock market's expectation of volatility based on S&P 500 index options. So it's really one of the only forward-looking metrics in the market. As we all know, most indicators and things that you can add to your charts and your charting platform are lagging based on previous price action. The VIX is a little different in that it is a forward-looking metric. And it measures the frequency and magnitude of price movements that a security experiences over a specified period of time. So basically, the more extreme the price swings in the security, the higher the level of volatility. And this, as you'll see shortly, can give us really valuable information regardless of what strategy or system we're using in the markets. So again, it's a measure of expected future volatility. Okay, we're not using any sort of lagging information that may not pan out into the future. The VIX is actually a forward-looking indicator, and it estimates the expected volatility by aggregating the weighted prices of the S&P 500 index, so all the stocks in the S&P 500, and using the puts and calls, or options, in other words, over a wide range of strike prices. And then the prices used to calculate the VIX index are midpoints of the real-time SPX option bid-ask price quotation. So it's using real-time information to give forward-looking, basically insights into what the market may likely do going forward. So to kind of put this into a number perspective, the VIX, which by the way, you can't trade directly, like there are no shares of the VIX. You can only trade options on the VIX. But it will give you a price chart just like any other stock chart or Forex chart or futures chart. But basically a VIX value greater than 20 indicates that we're in a volatile market. And as I mentioned at the start of our session, the VIX was hovering around 23 this morning. So we're still in volatile market conditions. And then anything less than 20 is generally considered normal market conditions. So I anticipate that we're going to stay elevated above 20 in the VIX going through the end of the year and probably even into 2021 until we see a viable vaccine for COVID-19 hit the market and become widely available. And certainly with the presidential election contesting, that's going to play into that as well. So I want you guys to imagine taking all of this into consideration: volatility in the markets, the presidential election cycle, COVID-19, all of these things that are causing this elevated volatility and how difficult that can make it to navigate the markets. But imagine if you could navigate the markets even in very volatile conditions and buy low and sell high without any guesswork. And that's what I'm going to allow you guys to discover on the session today by showing you my proprietary SLINGSHOT setup. And that setup uses one volatility study that's actually made this possible since the beginning of the market. So as I mentioned, even if you go back to the dawn of the market and look on your charts for this SLINGSHOT setup that I'm going to share with you today, you'll find that it's played out the way that I'll demonstrate 100% of the time with 100% accuracy, which is pretty cool. And it's allowed traders to buy low and sell high with this level of accuracy if you trade it in the way that I'll teach you. It also warns of potential market sell-offs. So not only does it tell you when to get into the market after a sell-off, it also does a really nice job at warning of unforeseen market sell-offs, black swan events. If you're trading a certain stock that has an upcoming quarterly earnings release, it can help warn you of that. If there's a sell-off in the stock, any sort of unknown that I mentioned the market doesn't like, that uncertainty, it can help us navigate that and be prepared for it. So basically, once the bands of the market can't be stretched any further, they must bounce back. So this is an inevitability that's built into the SLINGSHOT that I'll share with you that allows it to work in the way that it does. And there really are not very many inevitabilities in the market. And so if you can find a setup or a strategy or a system that works off of inevitabilities, it's going to be that much more powerful and more reliable and consistent going forward, regardless of what the market conditions are. Okay, and so keep that in mind because it's highly crucial in becoming a successful, consistent, profitable trader. And this rubber band effect that I'll share with you makes it possible to accurately identify tops and bottoms in the market as well. Okay, so most of us trade directionally, so we're either buying with the expectation that prices will go up or selling with the expectation prices will go down. There are obviously a lot of other non-directional strategies out there, and this can be applied to those as well. But ultimately, we want to have some idea of whether we're getting in at a good price or protecting our capital or shorting the market when prices are overbought and likely to go down. So let's look at that in the context of probably an all too familiar chart for many of you who are already trading and investing, is the Corona crash that took place earlier this year in February and March. And so I'm going to show you kind of what this setup looks like on a chart, and then we'll get more into more detail on how to trade this. But basically, this is a daily chart of the S&P 500, and on the very left side of the chart, we were hitting all-time highs in the market. So in fact, I think it was February 19th, we hit an all-time high in the market before the market sold off. Okay, so what we want to do here is take a contrarian approach, and instead of having that fear of missing out on future profits and getting overly optimistic when prices are rising, as most probably 90% plus of traders and investors were doing at this point in the market back in February before the crash, we want to take a contrarian approach. And when other people are being greedy, we want to be fearful and look to sell or cover our positions or hedge or whatever we want to do to protect capital or even make money on the sell-off. And then as the sell-off ensues, we want to look for opportunities to buy when most other traders are panicking and selling before price ultimately goes back up to where the sell-off began. Okay, and again, this is where most traders are going to start buying again, but this is where we would be taking profits. So hopefully that makes sense, that we're taking a contrarian approach and kind of doing the opposite of what most other traders and investors are doing. And we all know that most traders and investors do not succeed over the long term. That's an unfortunate fact of the markets, okay? But if you trade with a contrarian approach, you can actually be among the 10% or fewer that actually makes money consistently. And this setup will allow you to do that. So let's talk a little bit before we get into the nuances of the setup about how presidential elections affect the markets. Again, the markets don't like uncertainty. We all know that now. A new president can certainly cause uncertainty. And if the Biden election holds and he takes office next year, then we're going to see obviously a lot of uncertainty, increased regulations, higher taxes, other policies the market perceives as anti-business. Those can all impact market sentiment. And typically after an election, stock market returns tend to be lower the following year. And that's regardless of which party takes office. And bonds tend to outperform after the election. Now, I'm not going to be putting my money into bonds because I know how to navigate the equities markets even in post-election cycles. And you guys will too here by the end of our session. So when a new party comes into power, stock market gains have averaged 5%. So that's on the lower end, right? Because I think if you look over the last decade or so, the S&P averaged around 8 or 9%. So generally, returns are muted the year after the election. Now, we can do a lot better than 5%. I plan on doing much, much better than 5%. Now, when the same president is reelected, or if one party retains control of the White House, returns have generally been a little higher, okay, at 6.5%. So if Biden stays in office going into next year, then we will probably see muted returns if you were just to be a buy on hold investor. Okay, but again, the bottom line is markets experience increased volatility during election periods, not just leading up to the election, but also following the election. As certainly if a new party comes into office, there's all that uncertainty with new policies and regulations, et cetera, that are going to impact market performance. Okay, so I want you guys to be able to navigate that. So let me give you a little quick background on myself. If you haven't attended any of my previous educational events, I do have 20 years of experience trading the stock options and futures markets. I received professional training at Morgan Stanley. I'm also the founder and chief investment strategist of Altos Trading. Actually, currently, we're probably closer to around 40,000 members in over 100 countries across the globe. I'm also a professional hedge fund manager at Altos Capital, so I do manage money for my clients. That's not the purpose of our session today. This is not an endorsement to invest in my fund, but I will be sharing a lot of the tips, tricks, and tactics that I use in my Altos Capital hedge fund with you guys today. So this is a really rare opportunity to see how a hedge fund manager manages money for clients. And I don't hold anything back there. So I'm going to show you everything I do. And then I'm also the founder and creator of Trade Trend Signal software, which I'll be sharing some information with you guys on today as well. And I do use that software in my hedge fund as well as my own personal trading account. All right, so by the end of our session, you guys are going to discover one trade setup that's produced massive returns going back to the beginning of the stock market. And in fact, the event's so reliable, it's worked 100% of the time, not failed even once, including in the recent Corona crash, as I showed you. And it happens over and over again with astounding predictability. So it doesn't happen all the time, but when it does set up, be ready because the potential for profits is really, really big. And whether you're just starting out or you're a seasoned pro, this is really must-have information for today's markets. So what you guys are going to discover is why volatility is one of the only leading indicators of market direction, how to identify when markets may be vulnerable to a sell-off, and this will completely turn your trading around because we all fear that unknown, right? The market sell-off, the black swan event, the market crash, all these things that can move the markets before we have the ability to take action. Okay, so that's going to help with that. And then I'll show you how to identify when the market is likely to go up. So after one of these sell-offs or black swan events or bear markets, whatever causes the market to go down, I'll show you guys how to be prepared for it to return, and which we've obviously seen after the Corona crash, right? We're hitting new all-time highs in the market now. I'll show you exactly how to determine how far the market is likely to go up. This is what I call the trader's dilemma. So once you get into a position, there's a major dilemma that takes place for all of us. How long do we stay in a profitable position? None of us want to give up on any future potential profit, but we also don't want to see those profits erode on a reversal in the position and turn into a loss, right? So that's the dilemma. When do you get out of the market? We're going to solve that problem. How to get your hands on a tool that will change your trading forever. And I say that very sincerely because I use this tool myself and it's changed my trading forever. It's changed my life forever. So I'm going to share that with you guys today. So let's start out by imagining a slingshot. I like this analogy because it's familiar, it's easy to understand, and it applies to the markets. So we know that as a slingshot is pulled back, muscle energy is transferred to elastic energy in the bands of the slingshot. And then once we release those bands, the bands of the slingshot, the elastic energy is transferred to the stone as energy of motion. That's what causes the stone to be propelled from the slingshot and move forward, right? And that's what's referred to in physics as kinetic energy. And that's about as deep into a physics lesson we're going to get on our session. But keep in mind, kinetic energy is an important concept as it applies to the markets because basically kinetic energy in the markets presents itself as supply and demand, or buying pressure and selling pressure. So when we're looking for buying points in the market, we want to look for that band to be stretched way back, which is going to create buying pressure. So remember on that Corona crash chart, the market sells off, people are panicking, they're fearful, they're taking losses. We want to look for demand or buying, or where things are starting to turn around, and look for buying pressure that will push prices back up. So this is a key concept, and I'm probably going to read it twice. I usually do when I present this this topic because it's so important. Once the band becomes overstretched, it gives us a buy signal, and we can enter the market with a high confidence that prices will go up to the initial resting point of the band. So again, once the band becomes overstretched, it gives us a buy signal, and we can enter the market with high confidence that prices will go up to the initial resting point of the band. Okay, and this is what is going to be applied to the slingshot setup. So remember, I mentioned volatility is a forward-looking predictive indicator. And the volatility bands that we're going to use tell us when prices move too far from the mean or the average and is likely to reverse direction. And the study we're going to use to determine this are the Bollinger Bands. So put an X in the chat box if you guys have used or heard of the Bollinger Bands. Right. So we've got some people who have used them or heard of them. So I'm going to cover what these are and a few different ways that they're commonly used. And then we'll look at one of the better ways to use them that I've found. In fact, it's the proprietary setup that I've developed for the slingshot trade. And it's a way that I've never really seen them used before, but I've found to be the most effective. The good news is this is a free indicator. So regardless of what broker or charting platform you use, you can access this on your platform, add it to your chart, and use it to pinpoint turning points in a security with really astounding accuracy. So if you look at the chart here in the middle of your screen, this is, again, kind of what the slingshot setup is going to look at with the Bollinger Bands applied to the chart. So we see that the price is starting to hug this lower band, right? In other words, instead of bouncing off the lower band, which is what a lot of Bollinger Band traders expect it to do, price is starting to sell off, and we see a volatility expansion, and price goes down. So that is where we're actually going to want to look to sell out of any open profitable positions, or short the market to make money on the sell-off. And this is where we want to look to buy here at the bottom. And then we want to look to get out as price rebounds. So this again is what the slingshot setup looks like. It kind of looks like an upside down triangle. Okay, and we'll get into the nuances here in a minute. I saw some check boxes in the chat box of people who have used the Bollinger Bands, but I'm guessing a lot of you haven't used them or maybe don't even know what they are. So just a quick background on those. In order to calculate them, we take a simple moving average of the securities price. So you'll notice on the chart here, they are comprised of 3 bands. Okay, so that center band is the moving average. Then we take the standard deviation of the securities price, and it's basically the standard deviation is a mathematical measurement of average variance. So we're looking for a standard deviation variance from that middle band, and that's what comprises the outer bands, the upper and lower band. And what that standard deviation does is it measures how spread out numbers are from the average or that center band. And it can be calculated by taking the square root of the variance, which itself is the average of the squared differences of the mean. And then we take that and we multiply it by the standard deviation by 2 and add and subtract that from each point along the simple moving average. And that's again what produces the upper and lower bands. Now that sounds a little complex, and not to worry, you don't have to make these calculations on your own. This is all done automatically in the indicator on your platform. And I'm going to give you my exact settings that I use to put the Bollinger Bands on my chart and the way that we're going to use them. But because the standard deviation is a measure of volatility, because remember we talked about earlier in the session that volatility is one of the only forward-looking indicators in the market, and that's how we're going to use it. We're not going to use it as the lagging component like you can with other different sort of, I guess, ways that people use the Bollinger Bands, because there are probably a dozen or more ways that we can apply these in to a strategy or to a system. We're going to use them as a forward-looking metric. And so basically, to understand how that works is we need to know that when the markets become more volatile, the outer bands, the upper and lower band, they widen. And then when the market's less volatile, the bands contract. So here are my settings. There's only 2 inputs. The first is the center line, and that's the simple moving average, and I use a 20 period. And by the way, these are generally the default settings for most platforms, so you probably won't even have to adjust these. But if they aren't, these are the settings that you'll want to use. For the outer bands, we use 2 standard deviations from the mean. So that's it. 20 period SMA, 2 standard deviations. All right, so those are our volatility bands. Now I mentioned there's probably a dozen or more ways you can apply the Bollinger Bands to the markets. I'll talk a little bit about how and why John Bollinger created these. But here are some of the more common ways that they're used. In terms of like using them for different strategies, whether it's a trend strategy or a volatility strategy. The first is to buy at the bottom band and sell at the top band. And this can work well in ranging markets or sideways moving markets. The problem is that price can hug the upper or lower band for extended periods of time. Again, think back to the Corona crash when price hugged that lower band and the market sold off over 30%. So what ends up happening with this approach is that you wipe out a bunch of small winners with one big loser. So for that reason, we don't use that method. A second common approach is band contraction and expansion. Now this actually gives us really good information, as I'll share here in a minute, and it can be a good indicator of an impending big move in the security, but the problem is we don't know in which direction the move will occur. So yeah, there's some option strategies out there like straddles, strangles, etc. that we can use to play volatility, not knowing which direction the breakout's going to occur. But for the purposes of our session, we're not going to use this approach because there's that big unknown, which way is the volatility breakout going to go. Another common approach is to buy or sell at the middle band. And so remember, that's the moving average. And it can work really well in strong trending markets, but of course, markets don't trend strongly most of the time. Most of the time they move sideways or they sell off and then rebound or they're choppy. So it can work well in very specific trending market conditions, but it fails in sideways ranging markets. So it's kind of the same thing. You can wipe out a fairly good winner with a lot of losers, okay? So most of these approaches don't have a positive expectancy and they make it very difficult to make money consistently over the long term. Now the final approach is the slingshot setup that I've developed, which is where we wait for the lower band to break. So basically price will hug the lower band and ultimately rebound to where the breach initially occurred, okay? And this is really what I found to be the most accurate way to use volatility as a forward-looking indicator in the markets. So We're going to get into the slingshot setup. You've got a little sneak peek into what it looks like, but I'm going to actually show you all the rules and everything you need to know to trade it. So again, going back to the Bollinger Bands real quick. Again, those are developed by John Bollinger. He designed them to discover opportunities that give traders a high probability of identifying when an asset's oversold or overbought. Okay, so that was kind of the core of why he developed them. They've been around for a long time. I believe he developed them back in the 70s. So they've been around a good, half century. They've stood the test of time, but just like any other indicator, there's a lot of ways you can misuse them. Now with the slingshot setup, we're going to take a different approach. This is a bit of a contrarian approach. So we're going to wait for price to exceed or hug a band envelope for a prolonged period during strong trends. And then we wait for the lower band to break and wait for a buy signal, and then we exit when price returns to the breaking point. So those are the basic rules of the slingshot setup. And we'll look at that in practice here on some charts. Okay, but the bottom line is this setup has really occurred with astounding predictability. And if you look back all the way to the beginning of the market, the major market indices have returned to the initial volatility breakout with 100% accuracy. So that includes every presidential election sell-off, all four major corrections of 2018, the flash crash of 2015, the flash crash of 2010, the crash following the 2008 mortgage crisis. That's when the market lost more than half of its value in the second half of the year. The 2000 dot-com bubble, even the recent Corona crash, every black swan event, market correction, major crash, bear market, you name it, this setup has worked 100% of the time in these conditions. So let's look at that now in the context of the Corona crash. Same chart we looked at earlier, S&P 500 daily chart. You'll notice on the left side, we're in a very low volatility environment. Why is that? We're hitting new all-time highs in the market. We've had an unprecedented 10-year bull run in the market. And for those traders who are using that approach that I shared with you, where you buy at the bottom band and sell at the top band, they might have had a couple good trades there. But then the Corona crash sets in. This is where the slingshot trade starts to set up. So notice that price is starting to hug the lower band and go down. So instead of bouncing off that lower band, we're seeing a volatility expansion. And that's evident by the fact that the outer bands are diverging. They're moving away from each other. This is where the rubber bands start to get pulled back and the market sells off. So again, we're going to take a contrarian approach. We're going to protect capital or short the market to make money on the sell-off. And then when prices reach a low point, we're going to come in and buy as the market rebounds. And most people wonder, how did the market go back up in mid-March from a major sell-off, from a major pandemic, and return right back to where the sell-off ensued only a few short months later? Because the market is not always rational. It's driven by fear and greed. And the large institutions, hedge funds, etc., are very aware of that. And they come in and they buy when prices are low. And that's what drives prices back up, even in the midst of an economic shutdown and major pandemic. Okay. And so that's why you see this happen over and over again, because it's an opportunity to buy low and sell high for large institutions and hedge funds. Okay. So this is the slingshot setup. Let's look at another example, because I often get asked, does this not only work on market indices, but does it work on individual equities? Absolutely. The same principle applies. So you'll notice that on the left side of your chart, this is a chart of Apple. We're in a low volatility market conditions. The bands are relatively close together. Then we go into the strong uptrend in the first half of the chart. Price starts to bounce off the lower band. Interestingly, we saw some bullish rejection candles off of this lower band, but they failed and price sold off. So the stock went from around $196 a share on the lower band and sold off all the way down to $168. This is where we want to get in and buy. What happens? Price goes right back up to the initial volatility breakout. See that? It's an upside down triangle. It's a slingshot. Here's another example. The QQQ ETF, the NASDAQ 100 Trust. Left side of the chart, low volatility, horizontal bands, close together, volatility expansion, price starts to hug the lower band, sells off. Taking a contrarian approach, we come in and buy at lower prices with the knowledge that with a very high degree of accuracy, price will return right back up to the initial volatility breakout. Now, we don't necessarily know all the exact how this is going to play out on a timeline, but we do know that eventually price will return back up to that initial volatility breakout. Okay, that's very powerful information to have. Now, I also get asked, does this work on intraday timeframes? Absolutely. Same principle applies. Look at the left half of your chart, low volatility environment. In fact, if you were using the approach of buying at the lower band, selling at the upper band, you would have had a few nice trades in there, right, on the left side of the chart until right here. AMD, Advanced Micro Devices, on a 5-minute chart starts to sell off. Okay, price hugs the lower band. There's the slingshot. The bands are getting pulled back. We come in, we buy. What happens? Price returns right back up to the initial volatility breakout. That's how you buy low and sell high with a high degree of accuracy. Now, the one question probably most people have, so you can see very obviously where the price starts to hug the lower band. Instead of bouncing off the band, it starts to trade down. So about 3 or 4 candles into that sell-off, we would have known that band is starting, there's a volatility expansion, that the band is starting to break. The question is, how do we identify the buy zone? And this is a little bit more complex. We don't have enough time on our session today to get in all the nuances, so I'll just give you a few little tricks that you can use to help identify the reversal. One approach, because as I mentioned, we don't know, and we're not going to claim that we can get in right at the bottom, right? We don't know exactly where the bottom is necessarily. So one approach that you can use is to average into the position, because we do know with a high degree of accuracy that price will return to that initial volatility breakout. So one thing you can do is you can dollar cost average into the trade. As the sell-off ensues, maybe if you have a 10% sell-off, you enter a third of the position. If it goes down to 15%, you enter another third. If it goes down, 20% plus, you enter the other third. And then you've averaged in, and you'll still get in at a fairly good price, but not quite at the bottom. You can also use candlestick patterns like bullish reversal candles. Another approach would be to wait for price to trade back up into the bands, and then use a buy stop order to get in basically a confirmation that the momentum will continue to the upside. You can wait for price to trade back up above the middle band. That generally only works best in really extreme sell-offs. Otherwise, the middle band may be too close to the where the volatility breakout initiated. But those are some of the kind of the common approaches that you can use to get in on the sell-off. But really the trick is to identify when the band is overextended and ready to snap back. So what I've done is I've spent more than a decade and thousands of hours trying to determine when momentum is shifting and a new trend is starting. Okay, and what I've done is I've programmed this into an algorithm or a formula that reads the market in real time and configured it to work on all time frames and duplicate the success across all markets. So whether you're trading equities, ETFs, futures, Forex, I had to make it work across any asset class in an adaptable algorithmic formula that can reliably predict market trends. And the result is a tool that provides accurate buy and sell signals near the outer channels of the Bollinger Bands up to 3 candles in advance of the move. Again, that's key, up to 3 candles in advance of the move. So we're not trying to predict on the exact candle where the reversal is going to occur. We're giving a 3-candle advanced warning of when that move will take place. But the bottom line is when you formulate the right combination of momentum indicators, as we've done into this algorithm, and combine them with volatility studies and price action setups, you can accurately identify buy and sell signals at the outer bands of the Bollinger Bands. So the Bollinger Bands themselves, alone, is a very powerful tool. But imagine if you had another tool that you could add onto that and increase the probability of your buy and sell signals at those outer bands. I mean, that is incredible. And even if you don't use the Bollinger Bands, that would be incredible, right? So that's what we have developed into an algorithm called Trade Trend. And Trade Trend gives us accurate buy signals at the bottom of the slingshot. It also gives us sell signals as the slingshot is starting to set up. And it does so with a proprietary blend of momentum indicators that can help warn of market sell-offs and rebounds with short-term and long-term trends with astounding accuracy on any market, any asset class, whether you're trading stocks, ETFs, futures, Forex. You can also use it to screen for trades in a matter of seconds. So you can look for these opportunities with the click of a mouse on any time frame. You can also back test the results before you place a trade. So you can feel comfortable that whatever security or time frame you're trading in, that the system will give you profitable signals based on back test results. You can also use it to supercharge your option strategies. We have a lot of members who use this tool to more accurately pinpoint their entries for their options trades and ultimately trade like a pro without any guesswork involved. So again, it's a really powerful tool. I use it to trade for a living in the markets, and I also use this tool in my hedge fund. Now, I mentioned that I would give you guys a little trick to help you eliminate a lot of your losing trades. So I'm going to do that right now. And this is actually something that we programmed into the trade trend algorithm. So you don't even need to worry about it. And what it is a specific type of order that confirms momentum or trend direction. So most of the time, probably 80 to 90% of traders are going to enter the market with a limit order or a market order, right? So they get a signal from their system or their indicator, and they enter their limit order or their market order. The problem with that is if it's a false signal, you're immediately into a losing position. So instead of doing that, what we do is we use a buy stop order to enter long trades. In other words, we put a buy stop limit order above the high of the candle where we get the signal, or for a short trade, we just conversely use a sell stop limit order below the low of the candle where we get the signal. And that's going to help filter out a lot of those bad trades, because if there's no momentum follow through, if there's no follow through on the trend, then we simply don't get into the trade. And it's also a great way to enter trades because the majority of the trades you do get into are going to start out in profitable territory, right? Because you're just entering the order to go along with the anticipated trend direction. And it really improves consistency and profitability. And I use this type of order almost exclusively to enter all of my trades, unless it's like a complex multi-leg options trade. So in terms of a directional trade, this is really all I use. And again, it's programmed into the trade trend indicator, which gives you the exact entry price using these types of orders with no guesswork. So this is all great, right? But how does it work in real market conditions in some of the most extreme market environments with real money? Well, that's what I'm going to share with you. And I don't do this very often, but I think it's important when you're sharing valuable information with students that they see the proof behind it. And that's what I'm going to share. So this is my a screenshot of my real money TD Ameritrade brokerage account from the Corona crash. And I was trading very cautiously back in February. I saw the SLINGSHOT setup starting to set up. So I became very cautious. I took profits on a lot of my open positions, and I hedged a lot of my positions that I left open because I knew that the market was likely to see a sell-off as that SLINGSHOT setup, in other words, as the price started to hug the lower band, was taking place. So at the end of February, as the sell-off was taking place, I did pretty well. I did over $13,000 in profits at the end of the month. But again, I was being very cautious. I was mostly in cash. I only had probably 5 to 10% of my account into trades. But then as the SLINGSHOT setup really started to set in, and I knew that there was a very strong probability of price going back up to the initial volatility breakout with the SLINGSHOT setup, I started to get in. I was still fairly cautious because, yeah, we're in the midst of a major pandemic. Who knows what's going to happen? So I still remain cautious, but I got a little more aggressive. So this is a screenshot from my real money TD Ameritrade brokerage account at the end of March. And I did over $27,000 that month. Guys, I was only using a very, very small percentage of my account. And as you can see on the position sizing, only 1 to 3 contracts. Okay, so I wasn't doing anything crazy here to make these kind of profits. But in the 2 months that covered that Corona crash this year, I made over $40,000 in real cash profits using the trade trend signals in combination with the SLINGSHOT setup. Okay, so this is what's possible with these two tools combined together in real money account. Okay, so I'm not guaranteeing you're going to mirror this, but I'm just showing you what I've been able to do using these two tools. So the beauty with trade trend is it works in any market, any time frame, and any size account. So in our session today, we focused on volatile market conditions because that's what we're in right now. But I also use this tool when market conditions are not volatile. When the VIX is below 20, it actually works even better. Things are a lot more calm, but it can work very well in volatile market conditions. And that does that because it provides predictive buy and sell signals before the move occurs up to 3 candles in advance. So this is really what sets it apart from any other indicator you're going to find on your charting platform and most other signal packages out there. They give you a signal, you've got to act on it right then and there, right? And you may get into the trade and it could immediately reverse on you. With trade trend, it gives you the exact entry price and tells you whether to buy or sell up to 3 candles in advance. So imagine if you're trading off a daily chart, you know up to 3 days in advance whether you're going to be buying, going long, or selling, going short, and the exact entry price to enter with your broker. No guesswork. And then you just sit and wait. Go out and have fun, play golf. Go out and do some shopping. Do whatever you enjoy doing. If you're on vacation, you don't need to sit and watch it. Ahead of time, you put your order in and then you just wait. If the trade doesn't trigger, you simply take the order off. Now, if you're trading intraday, let's say you're trading off of a 5-minute chart, you know up to 15 minutes in advance where to place your buy stop or sell stop limit order to get into the trade. That's it. And then once the trade is entered, Trade Trend also prints the trailing stop on your chart. So you always know how to manage the position, where to place your trailing stop order, and when to get out. No guesswork, period. And it's predicted every market crash and rebound in the history of the market with 100% accuracy. And I challenge you to take the Trade Trend signals and go back and look at every major market swing, volatile market conditions, all the presidential election cycles, all the black swan events, bear markets, recessions, depression, going back to the 30s. Look at all of them, and you'll see that there was a sell warning for each of those events. Here's another example. This is the flash crash of August 2015. If you guys were trading about 5 years ago, Trade Trend gave us a sell signal. The market tanks. It also gave us a nice buy signal on that double bottom before prices rebounded. 2008 mortgage crisis. If you guys were trading over a decade ago, market lost more than half of its value in the second half of the year. This is not what you want to get trapped in. Okay, because the market was doing really well, right? There was a big housing bubble. It's kind of what happened over the last 10 years. There's been a big bubble, and we're starting to see that slow down and reverse. Trade Trend gave us a sell warning right before May 21st, before prices started to sell off, and you see that slingshot trade setting up, prices hugging the lower band. It gave us a nice buy signal there at the end of November before prices rebound in 2009. Let's go back 20 years now, 2000.com bubble. Same thing. Low volatility environment, you see the volatility expansion there. Price starts to hug the lower band, slingshot setup. Trade Trend gives us a sell warning. The market crashes. This is a daily chart of the S&P 500. Mid-September, we get a nice buy signal before price starts to go back up to the initial breaking point of the band. So guys, virtually every system is going to produce winning trades. Regardless of what system you buy out there or follow or what indicator you use, you're going to get winning trades, but you're also going to get losing trades. And the problem is they don't keep you out of the market when conditions aren't favorable, and you end up giving back your profits on the losing trades. Does that sound familiar to anybody? I know that I've been there, and it's a reality of trading. But when you use Trade Trend and when you use tools like the Slingshot setup, and by the way, we have a lot more really cool setups like the Slingshot that we share in our members area that I'll show you how you can get access to in here in a minute, that when you combine with Trade Trend are just really incredible, and they're going to help you prevent you from giving your profits back on your losing trades. You're still going to have losing trades, but I'm going to show you how to contain them. More real money proof. Again, not to brag here, guys, but I just want to show you what I've done with the Trade Trend signal software. These are actually trades. I didn't even use the Slingshot setup. This is purely using the Trade Trend buy and sell signals in the futures market. Nothing crazy here. I was just trading one contract per trade that you see on your screen here, making over $8,000 profit in a day with over $27,000 in open profit, over $6,500 in a day, over $6,000 in a day, over $5,400 in a day. By the way, I took these screenshots back in 2018 during the 4 major market corrections just to show what's possible when the market gets wild. And they're not all winners. We got some losers in there, but Trade Trend helps keep the losses contained, and it helps let your profitable trades run as long as possible. And that's key. That's what creates the positive expectancy in trading that we all need to be consistently profitable. So here's my promise to you guys. I want to help you guys have days just like these, and I'm going to give you access to a tool that lets you copy my trades. And this is a one-time opportunity for the Presidential Profits event with Westmark to join me to discover how I make consistent income in the markets day after day and week after week. And I'm going to reveal every one of my special techniques and indicators that make profits like this possible with absolutely nothing held back. So you guys learned my Slingshot setup today. There's much more just like that I have to share with you. So what you're going to get is 12 months of Trade Trend for stocks, futures, and Forex. So you get all my signals, and I'll show you how to get those in a second on any platform that you choose. Exact entry and exit signals, live interactive trade sessions. So my partner Richard and I hold these ourselves. So you're going to get live interactive sessions with me. We hold those several times a month. In fact, we're holding our first one tomorrow. So if you join us today, you'll be able to join us tomorrow evening. We hold them in the evenings. If you can't join, not to worry. We record all of them and post them in our members area, which you also get access to. All the previous replays and recorded training sessions, full support and personal coaching for me on the sessions, trade adjustments to fix losing trades. So if you trade options, we have a whole arsenal of adjustment techniques to fix losing options trades and turn them into winners that we share in our training and on our sessions. I also share my most profitable tickers to trade on our sessions, and you get access to Trade Trend, which gives you all of these astounding, highly accurate signals that take all the guesswork out of your trading, regardless of what time frame you trade in and regardless of what market you trade in, and what asset class you're trading. So what I want to help you guys do is cut the learning curve and trade like a pro starting as early as tomorrow, guys. The learning curve for trading and investing is probably one of the steepest of all professions. It's probably fairly similar to being a doctor or a lawyer. It takes years and years and years to become successful and learn all the ins and outs that make it possible to make a living doing this. And I know that firsthand because I spent well over a decade trying to quit my day job and do this for a living before I was able to actually do it. So that's the purpose of this tool, is to help you guys do that in much shorter period of time. So I want you guys to ask yourself, if you were able to trade the post-election markets like a pro, how much would that be worth to you? I really anticipate things are going to get wild here through the end of the year and probably in the next year. And so ask yourself, if you could navigate those types of market conditions without guesswork, that's really invaluable, right? So it's priceless. And if you're able to buy low and sell high and even beat the pros, and guys, I think you can beat the pros. I think you can beat a lot of the hedge funds out there using the slingshot setup with Trade Trend. And so ask yourself how much that's really worth to you. And finally, if you had an experienced coach guide you down the path to success, how much would that be worth to you? Well, I'm going to kind of put this in dollar terms for you in terms of what we generally price this at and retail pricing and everything that you're going to get in our Presidential Profits Volatility Trader package. So again, you get all of our signals, any market, any time frame that you choose for the next 12 months on the platform of your choice, and that's a $1,499 value. If you went on our website and bought an annual subscription, it's $1,499. We're also going to throw in our live trade sessions. That's a $550 value. In fact, we have our next session, as I mentioned, tomorrow on the 12th at 7 p.m. Eastern Time. You'll be able to join that. You'll get personal coaching from me. That's a $1,997 value. I'll answer any question you have, help you with anything you need on those sessions, as well as via email. We also give you access to our invitation-only Facebook group. That's a $199 value. Again, guys, if you went and bought all these individually on our site, this is what you would pay for these things individually. Professional Trading Series online course is $900. That's our 10 hours of online learning that covers our best options, futures, forex, stock strategies. And then ultimately, with the Volatility Trader package, you get to trade stocks, futures, forex, and options with consistency, which of course is priceless. Then I'm going to throw in a couple bonuses. Bonus number one, this one's really, really valuable. In fact, it's worth the entire package in and of itself. I'm going to take my top 2 weekly trade trend picks. So I do the research every Sunday, and on Monday, I send those out to you. Every single Monday, you get my top 2 weekly trade trend picks. That's a $997 value. So if you just bought that package alone, it's $997. And then I'm also going to throw in for bonus number 2, how to create risk-free trades. This is a really cool little money management technique that I use to help mitigate or even eliminate risk in most of my trades. It's a $97 value. So you also get that. So the total retail value on our Volatility Trader package for Presidential Profits is over $5,000, but we're taking 80% off just for today and limiting it to 10 seats. And we limit it because of a few things that you see on your screen here, namely the live trade sessions and personal coaching. Those things take up a lot of my time, right? Because I have to be there to help you guys succeed. And I can't do that if we take unlimited members. Believe me, I'd love to sell hundreds of these, but I simply am not going to do that and risk sacrificing service to my students. So we're limiting this to 10 seats. Once the 10 seats are filled up, they're gone, and we won't be selling this at 80% off anymore. You would have to pay the retail price to get everything you see on your screen. Okay, so we're taking 80% off. You get all this for $997. You get everything on your screen for life and 12 months of Trade Trend. Okay, so if you want to renew Trade Trend after the subscription's up, you can do that at the discounted price of $997. You'll never pay the full $14.99 retail value again. If you decide that after the 12 months, you've learned all of our best strategies and tactics and tricks, you don't need Trade Trend anymore, that's fine too. You still get everything else for a lifetime at $997. Okay. If you want to take advantage of this, go to westmarktrading.com/M11-trend. And I believe Raleigh will be putting that in the chat box for you guys to claim one of your 10 seats. Take advantage of this special offer. Okay. And then I'm going to throw in a guarantee real quick before we get to Q&A. I know we're kind of out of time, but we'll see what what they're willing to give me in terms of Q&A. If you don't make at least your membership fee back in the first 90 days, so I'm giving you 3 months to use this, I'm going to give you an extra year of trade trend on the house. That's a $1,499 value out of our pocket. You get it for free. That's how confident I am that you can succeed with this. And I'm going to back it up with that guarantee. Again, westmarktrading.com/M11-trend. Now, real quick, because this is probably one of the most common Q&As we get, what platforms is Trade Trend available on? So it's available on some of the popular online charting platforms, Wealth Charts, TradingView, Metastock, NinjaTrader, Thinkorswim, and TradeStation. We also now have it available on our website, tradetrend.com. So you guys get to pick which platform you want to use it on. If it's not available on your broker platform, I would suggest going with one of the charting, online charting platforms, because you can simply take the order and you've got plenty of time, remember, because it gives you up to 3 candles of advance warning to take that order and just enter it with your broker. In fact, I use some of these charts like Wealth Charts and TradingView on the go because they have great mobile charting platforms. And I just take the signal and then I go over to my TD Ameritrade account, put the order in, and I'm done. And then again, you get my top 2 bonuses, 2 trades emailed to you every Monday, right to your inbox. That's 104 chances to grow your wealth over the next year. And then my ebook for bonus number 2, how to create risk-free trades. Now we're kind of out of time. I wanted to share some testimonials with you guys, but since we're short on time, I'll just really quickly highlight one of these because it's one of my favorites that I got earlier this year from one of our students, Brian. He was really struggling in the markets last year and in fact said he was down around $42,000 and then was using Trade Trend to trade the futures markets. And he wrote to us earlier this year and said that he's recouped all those losses and was then net positive $47,000 on Trade Trend trades. So he made over $90,000 in profits in only 90 days. Guys, that's averaging 30 grand a month using the Trade Trend signals. And he said it would have actually generated even higher returns if not for mistakes on his part. Guys, so we get testimonials like this every single day. We have hundreds, if not thousands of them. And I want you guys to be one of my testimonials. So go to westmarktrading.com/M11-trend. It only takes 1 winning trade to pay for your lifetime membership, but buying low and selling high is priceless, and we're going to help you guys accomplish that. So I'm going to pass it back over to Raleigh. I know we're kind of ran a little bit over here, but if there are any questions, I can answer those. If I don't get to them, simply email support@altostrading.com, and we'll do the best we can to answer those for you.
Absolutely. Well, Jeff, what a great presentation. And once again, it was a very, very fast hour. So appreciate everything you were able to cover in that period of time. There were several questions that came up, and I just want to, I think you addressed most of them. There were questions about any market, any time frame, yes and yes. You know, what platforms? You answered the question with regard to platforms. There was, I know one question was, from your perspective, when you look at Trade Trend and how you trade the markets, do you focus on a particular market? Or if somebody were coming into your live trading room, would they see you trading some futures and some stocks and maybe some options and a little bit of all that?
Yeah, great question, Raleigh. Yeah, so we appeal to all traders. We look at all markets. So we kind of focus on one market on our sessions. So, you know, one session we may look at, do options, another futures, another Forex, but they are interactive sessions. So we encourage our attendees to share whatever they want to look at. So we keep it wide open. If somebody wants to look at a chart, you know, a Forex chart, or they want to look at an Apple chart on the 5-minute time frame, we will look at anything they want. And ultimately, we run scans together and find opportunities together. So it's really an interactive group session that we hold that really is set up for with the idea for everyone to be successful regardless of what market or time frame they trade in.
Well, that's fantastic. Jeff, thank you once again for your time today. We know that you're a busy guy, and I just want to let people know that here's the package, the Trade Trend Signal package. As Jeff said, he's only looking for 10 people because, you know, there's a lot of hands-on focused work that he does with his students. He can't take any more than that on top of the current registrants that he has. 12-month subscription, personal coaching, live trading sessions, stocks, futures, everything you need to know. Go to westmarktrading.com, M11.trend to get more information on his special package. Once again, thank you, Jeff, so much for your time.
Thanks for having me. Thanks to Pat and Nikki and Robin and everyone for making this possible.
You're welcome, buddy. Well, folks, here we are. It's quiz time. We know that it's close to the top of the hour here, and we like to mix a little bit of fun with education. And we do have a quiz. And to win this quiz, as I understand it, I'm getting a hang of it, ladies. I'm getting a hang of it. I understand you just have to be the first person that gives the correct answer. It's as
That's
simple as
right.
that.
That's right. In either
No-
the chat box or the Q&A. So
And don't forget, our moderators are the ones that determine who got the answer
Yep,
correctly.
they can see everything.
Yep.
So
And they are incorruptible, I understand.
that's right.
Okie doke. So let's go with the question.
All right. So who was the first president to appear on television?
I see answers are pouring in.
Okay. We do need to remind people that if you won once today,
All righty. We've got a winner. Looks like Glenn Lee is the winner. So congratulations, Glenn. Pop your email into the chat box or Q&A, wherever you entered the question. And let's see what the answer is. I'm curious. Franklin D. Roosevelt, opening of the World's Fair in New York on April 30th, 1939. Interesting.
How about that? I would not have guessed that at all. I thought it was Kennedy or something like that.